What's up, guys? Wanted to do a video for you today because I've got a new book that just came out. It's called The Wealth Creation Playbook. It is by myself. I put it together for you guys. And I wanted to go over one of the things that I thought was really important for anybody today. Whether you get the book, whether you don't get the book, you can go to bell-capital.com/wealthbook. That's bell-capital.com/wealthbook. Get it. I promise you it won't let you down, man. It's going to be a great thing. But the one big concept I wanted to share with you guys on this training today, on this video about the book, right? Was why 10 million should be your new target as it relates to creating wealth. Because a little while ago, Charles Schwab came out and said that they did a survey on most of their customers. They're a big financial advisor. They have a lot of people that are planning for wealth, putting their money over there. Everybody knows who Charles Schwab is as it relates to an investment firm. But they said that most people feel like they need $2 million to retire comfortably. And I want to challenge you guys with that because if you are a professional, you're a business owner, or maybe you're a doctor, you're a chiropractor, you're a dentist, you have a small business, whatever that is, you know for yourself that $2 million in an account that's supposed to provide for you in the future so you can close your business, your practice, whatever that is not going to be enough for you to live off of. So in the book, I talk about this thing. There's a way to go about doing this as it relates to building wealth for you and your family. But I wanted to kind of challenge you guys to say, look, 10 million is the new 2 million for you guys if you're going to commit to creating massive amounts of wealth for you and your family, period. So the reason why I chose 10 million, because in the book, in the very first chapter, I talk about where are you at on this wealth pyramid. There's a wealth pyramid. If you go to Google, it's there. I wish I could have showed it to you. I have one out, but I don't. But at the top of the pyramid, that shows the wealthy. And then at the next line down, that shows rich, right? There's a gap of being rich. And then below that, there's upper middle class. And then in the middle, which is the middle class, which is where most people fall. Middle class millionaires fall there. That's the people with the house, the college, the debt, the car loans, the country club memberships, things like that. Everyone in that middle to upper middle class. And then below that, there's the poverty line, which is the bottom of the pyramid. Now, poverty line in America is different from other countries. Like the poverty line in America could be like the upper middle class or the upper wealthy in some other countries, but we're talking about this one. So if you take a look at that, the biggest group on this pyramid, the ones that get hammered the hardest, they pay the most in taxes, they have the most problems, they have the most debt, is the middle class. So, and a lot of business owners are in that middle class as well, right? So if you want to take a look at where you are and you're going to make a commitment to wealth, I want to kind of challenge you. Because if you get the book, go to bell-capital.com/wealthbook. In the pyramid, what you want is you want to jump from upper middle class, most people are in the upper middle class, to past rich to wealth, right? And if you look at the statistic as it relates to income is concerned, being at that top wealth, the top wealth as it relates to earned income in America is roughly about $400,000 to $700,000 annual. That's earned income or income generated for that person. And it could be a household income. It's a weird gap of 400,000 to 700,000. But in my head, I'm like, yeah, that makes sense if you have a spouse or or a husband and a wife or a couple that actually have a combined household income of $350,000 each because they're professionals, they have a business, whatever, and then they roll into that $700,000. But that's the top period as it relates to income is concerned. But what I want to challenge you guys to think about, especially if you're a small business owner or if you have a practice or you're a high paid professional, you're a high net worth individual, usually that $500,000 range based on revenue and income, passive income, cash flow coming in from investment opportunities that you have should be somewhere around 5%. Used to be 8. To me, 5% is good. And I think that's a lower risk as it relates to what's concerned in the world. Right now, I think the treasuries are somewhere around 4.4%. So even on a safe fixed income investment on just treasuries, that gets you no benefit whatsoever aside from just being invested in a treasury and you getting your return on your money. It's still at 4.5. So 5% on something that has some benefits also additional to it is going to be a benefit to you. All right. So why 10 million? Because if you take 10 million, and I'm going to do it on my phone so you can see it, and this is I keep everything really simple for you guys that know me. I think very simply for everything. So I'm like, okay, look, if you wanted to have $500,000 coming in, you just divide that by 5%, which is what we're thinking about as it relates to valuation. So you should have $10 million in some investment vehicle that You should have $10 million. This is the commitment you have to make for wealth. So I'm going to help you set a target. If you want to have $500,000 coming in, passive income revenue coming in annually per year, you need to put your money in $10 million in play, giving you 5% a year. That is your new target. How do you get $10 million? That's the that is the commitment you have to make is the money. The target is always money when you're creating wealth. It's not the vehicle. It's how much money do you need to have invested and what is the return amount? And then you focus on all the other stuff. Because if you have a business, then now you know the money that you need to be socking away every year. Hey, how do we get to the place where we have our revenue coming in for the business, covers all of our costs, we're paying all of our taxes, and then we need to put away X amount of dollars that gets up to $10 million in some type of investment vehicle, right? Preferably real estate. So that said, that's the first thing. So in this wealth cycle, in this wealth thing that you have to put together, I call like a wealth cycle or this plan that you have. Number one thing you have to do is you need to have a target. I just gave you a target. Go from $2 million as a goal to having $10 million invested in something that gives you 5% that has some other benefits to it. We'll go over the benefits in a second. So number one thing is you make a decision. Second, you make a commitment. And then third, as it relates to the second piece of the wealth cycle that you have to focus on is you need to have a plan. So within your plan, if you have a business, naturally your plan involves what? Getting your revenue and your income in your business up. You're only going to be able to do that a couple of different ways. I go through it a lot in my videos. 70% of your time needs to be spent on marketing, sales, and the other 15% of that needs to be put on product or services, and the other 15% of that needs to be on scaling what works, but the rest of it really, because the only thing that makes money in your business, brings in money or revenue in your company, is going to be sales and marketing and sales, and closing it and getting more money in, delivering your service, scaling your business so you can deliver more of those services, and now you have the money to continue to play with. So that's number one. That's number two. Make a decision. Number one is make a decision. Number two is come up with a plan. How do you get that revenue? How do you create the additional $10 million that you need to put off to the side? And it's going to be through your business, or it's going to be through your job, or some other type of investments that you're going to make, or you're going to take what you have now and you're going to start dumping it into something that's going to give you the returns that you need so you can start slowly building on top of that. But there's the plan. Get your income and your revenue up. All right. That's number two. So number three, you want to actually take your money that you've made and you want to invest it in something that's going to offset your tax burden, right? Goes right back to, like I said, you want to have a vehicle that you're going to put your money into, that you're going to invest in, that is going to give you these tax advantages. As you guys have been watching since 4th of July, and President Trump signed in the big, beautiful bill, which brought back 100% bonus depreciation, which is going to be a benefit to you guys, especially for us, because we're looking at multifamily real estate. The whole world's been waiting on that. That is a big marker. I think now everybody's been talking about, energy and things like that. That's coming around. But the big picture here is everybody's waiting for the interest rates to drop. So when I'm talking about finding something to be able to put your money into, or some place for you to invest your money that helps you shelter more of your investment from taxes, but one of the things I'm talking about is an investment vehicle that is able to do that. So that's number three as it relates to the cycle that you need to follow. Finding tax shelters. And then number four is the investments. You need to be able to invest more of that money. So naturally, if you're going to find something that gives you the tax shelter to offset your taxes, so you pay less and less money to the IRS, so you keep more of the revenue that you make from your business and your income that you're looking to create this additional $10 million. That's not going to happen over time. It may happen over 5 years, 10 years, 7 years, but it's this having a target for you to focus on, so you know why you're doing what you're doing, why you're pushing so hard. All right. And like I said, you need to have an investment vehicle that outlasts and outlives you, right? Real estate is one of those things to do that. Multifamily real estate is one of those things to do that, because it's big enough, if you find the right investment or the investor or a partner like myself, where you can do it passively. You can focus on your business, creating the more revenue, getting your stuff up, and focus on, hey, how do I kind of shelter a little bit from the tax burden I got while I'm making these investments passively? And then that money continues to grow on top of itself. All right. So then the next piece of that outside of your investments is the realization of those things. So you need to start to realize where you're so you made a decision to become wealthy. You have a wealthy target, $10 million in something that's going to give you, let's say, 5%. You need to now put together the plan. I need to create more revenue. in my company, my business, in my work, whatever that is. Then next, you need to be, hey, look, what are the tax shelters that are available to me? Real estate. Next, you need to start investing that capital in real estate. Boom. I got that for you. That's what Bell Capital is here for. Invest passively in the deal. You need help with that, go to bell-capital.com. You can take a look at our open fund. Then next, you want to be able to realize that, meaning that you're starting to get cash flow from your opportunities, getting cash flow, doubling down on it, putting more money into your deals. And then now you have to be able to live with these things from the realization piece. And really before the realization piece, outside of that, is the fact that you actually get and move into the asset protection part. So as you're making money, as you're making money, you want to be able to protect your assets. So now you're like, hey, look, I have this money coming in. Now I'm starting to get the tax write-offs. I'm starting to do these things. I'm starting to get myself set up into putting some of that cash flow into other opportunities, other investments, whether they're trusts that you have set up for you and your family, whether there are other type of life insurance policies that you can kind of create to borrow against those life insurance policies to kind of expand your business, go into other things, set up generational charitable trust for yourself, for your family, estate planning. All of these things go within this wealth category. And then last but not least, that's really when you start to realize it, because you can now start to play this game, traveling, taking time off, because your money's working for you instead of you just working for it. So super important to be able to kind of understand that. And I go through it better in the wealth cycle. But like I said, number one thing, you need to make a commitment. Where are you at on the pyramid? Where do you want to be? You want to move yourself out of the middle class, out of the upper middle class, out of the rich, which is also a trap as well, up into the wealthy piece. And then once you do that, next you need a plan. You're going to focus on your business, your income, your revenue, getting that up. So that way you can say, okay, how do I shelter more of my money? And then because now you have more money, you have a tax problem. So now you're like, okay, cool. I'm going to start planning that I have more revenue now with a plan to move my money into investments before I need it. It's called a tax strategy. You need tax strategies and or tax strategists to say, look, we're going to have a huge windfall of revenue coming in. We want to take that money. We want to move it into Bell Capital. We want to move it into our multifamily real estate. We want to take this money that was going towards our IRA 401k, and we want to self-direct that, and we want to invest that money in the cash flow real estate so we get the benefits of that. That is a tax strategy. And you do that before you have the revenue. You don't do it when you have it. It's too late. Most people forget that. You need a tax strategist in the beginning of the year, not at the end of the year, because you already are planning for this, which is why I said it's a plan. Next, you need to invest that capital. Boom, move it into real estate. Next, outside of that, the money that you're making now from your investments, you want asset protection. You want to protect the capital that you're making from your returns on your investments from your real estate. Then, like I said, last but not least, now you want to move into the realization or the recapitalization of those things, where you're making the investments into depreciating assets. You're going on trips, you're doing the other stuff, you're buying other things from your cash flow, but you also want to buy depreciating assets or invest in depreciating assets so you get that second wind of it. And you have all these assets to be able to write off. Your family's taken care of because you got charitable trust, all this stuff going to you, going to the charities that you care about, going to your church, going to contributions and bigger things that you want to be a part of, and you want to make this impact. So when you pass away, these things still work for you, and you have something to leave behind. All right. So that's why I wanted to kind of talk to you guys about this, because it is a wealth playbook. I go through it a lot more in detail in the book. It is a great book. It is one of the things that I think everybody needs to focus on. I'm starting to focus on it. Outside of with my company, there's a lot of things I'm not where I want to be yet. I'm honest. With Bell Capital, I have this big goal of Bell Capital, but like I said, I made a plan to become wealthy. This is my plan. And now I'm like, okay, cool. Build a company that allows myself and a lot of other people around me to create wealth while we manage those activities, and then do the same cycle I'm sharing with you, right? So the reason why I said real estate is kind of the best thing is because, like I talked about before, from the tax advantages, number one thing, you want to get into something that's a real asset. It has the highest tax advantages. 100% depreciation just came back. You get the tax write-offs that get passed on to you as an investor in multifamily, like if you did something with us, right? You get the cash flow, which is why people like to invest in there. You get passive income, cash flow from those things. You also get the, like I said, the capital protection, as well as the tax advantages. So that you get a double dip in those things, and you also get the opportunity to take part in the future appreciation, or the possibility of appreciation. And the reason why real estate to me is better than the stock market in doing these things is because you get control of a future appreciation. You got a guy like myself that's pushing on the real estate, getting with the property management company saying, hey, we need to continue to raise the rents based on inflation. Anything that we do nice at the property, taking care of our residents, taking care of our people, that in turn takes care of my investors. And then last but not least, we get the leverage. So every $1 gets us $3 worth of leverage in a real asset, which you don't get with stocks. If you buy $1 in stocks, you're buying $1 worth of stock and you're hoping it goes up. If you invest $1 in real estate with leverage, that $1 is worth $3 in a piece of real estate as it relates to investment is concerned. So, as a bonus, what I wanted to share with you guys too is when you're thinking through your wealth thing, don't just think through your revenue and your income. You have to think through your net worth. What is your net worth want? What do you want your net worth to be? Right. So for me, I have a big target because I have Bell Capital. My net worth target is 10 billion, right? Which means I got to get to $50 billion in assets under management, which not complicated. That's like 150 to 120,000 units across the United States and or globally. Doesn't know what that. I don't know exactly how to get there from that perspective, but that is a net worth target of mine. Nothing to do with the revenue, nothing to do with the income. But I understand that, and I didn't understand this when I was younger. I was just talking to a buddy of mine yesterday that has an agency. When I was younger, had somebody told me that while I was in my 20s, I was already a multimillionaire because of the level of assets that I had. Even though I didn't have a whole bunch of money sitting in an account, I could have actually used my net worth to my advantage because I would have been playing the money game, going to my bank, talking to them about what my net worth and my assets were, and being able to get financing and borrow against my net worth, get lines of credit to be able to accelerate my acquisition of more real assets. I didn't understand that. So when you're thinking through what your wealth target is, yes, you want to have $10 million invested, but you also want to consider what is your net worth going to be, because if you still want to play the money game, you can always use your net worth to build a bigger balance sheet or strengthen your balance sheet to be able to go back to your lenders with your business, with your network, with your net worth also, and to be able to say your network, meaning like your bankers and your attorneys and your financial advisors, and say, hey, look, here's what we want to do as it relates to money is concerned. We want to borrow against this, or we want to get a fund, or we're going to line of credit, whatever that is, a credit line, and we want to be able to acquire more assets. Those more assets give you more cash flow. Those more assets get added to your balance sheet, and it continues to build your wealth for you and your family for generations to come, like we said. So, but again, I got this book for you. I put it together. We created that last week. It is live. You can go to bell-capital.com/wealthbook. I promise you, go get that book, read it. Super short, to the point, no fluff, no nothing. But I go over what it is you have to do to get started. And I also want to be able to say, hey, look, we're here to help you, right? I mean, whether you do it with me, you do it by yourself, you do it with somebody else, doesn't matter. But you owe it to your family to make wealth your duty, which is what I talk about all the time. So let me know if you need anything. Leave something in the comments about what you got from this. I would love to hear your comments. I'm here for you. I'm always going to do this. I'll be here because I want to help you succeed financially. I made wealth my duty, and I want to help you make wealth your duty as well by being able to be a resource for you guys. Real estate wise, money wise, investment wise, we're here. All right. So you guys have a great day today. Let me know if you need anything. Like this video, share the video, comment on the video. Give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time. But I am here for you. And oh, by the way, go and get the book. It's bell-capital.com/wealthbook, bell-capital.com/wealthbook. Or if you're interested in finding out how you can invest with us at Bell Capital, just go to bell-capital.com, hit either get started or schedule a call. Somebody from my team will actually reach back out to you, or myself, and we'll answer any questions you have and get you started with your investment. All right. Have a great day today. Let me know if you need anything. Let's go.